This LOS is describe classifications of assets and markets. Classifications of assets and markets. So this is a pretty easy LOS because it's just asking for describe. It's just all based on definitions. So once again, I've put some words in bold. Those are the key words. And again, a lot of these key terms are in the glossary. I highly recommend people studying for the CFA exam to print out the glossary and be familiar with all the terms. Because if a question is just based on getting the correct definition, that really is low-hanging fruit. It's just some fairly easy memorization, okay? So let's just go through this. Markets that trade contracts that call for delivery in the future are forward or futures markets. Those that trade for immediate delivery are called spot markets. When issuers sell securities to investors, practitioners say that they trade in the primary market. When investors sell those securities to others, they trade in the secondary market. So be familiar with the difference between the primary market, like an IPO, initial public offering, when the security is sold to the investor, and then they trade on the stock market, which is the secondary market, okay? So practitioners classify financial markets as money markets or capital markets. Money markets trade debt instruments maturing in 1 year or less. So to be clear, equities don't trade in the money market. It's just debt instruments, only debt instruments, and it's 1 year or less on the money market. In contrast, capital markets trade instruments of longer duration, such as bonds and equities. Finally, practitioners distinguish between traditional investment markets and alternative investment markets. Alternative investments include hedge funds, private equities including venture capital, commodities, real estate securities and real estate properties, securitized debt, operating leases, machinery, collectibles, and precious gems. Okay, so what pops out in that list that's very important is that real estate securities and real estate is considered by the CFA Institute to be an alternative investment. In some other lines, you'll see that real estate is sometimes considered a traditional asset class because most people own real estate. But for CFA purposes, please note that real estate securities and properties is falling under the alternative. That's important. And operating leases is another one to see that it's saying it's being considered as an alternative investment, okay? And then finally, the collectibles and precious gems. There's a very nice article on the CFA Institute website talking about investments of passion. And that's another quick tip, is sometimes read some of the articles on the website. So we'll finish this LOS with a quick practice question. An investor primarily invests in stocks of publicly traded companies. The investor wants to increase the diversification of his or her portfolio. A friend has recommended investing in real estate properties. The purchase of real estate would best be characterized as a transaction in the A, derivative investment market, B, traditional investment market, or C, alternative investment market. Well, that question is quite easy because we just looked at the slide and I made my point. But you can see here, if you hadn't studied and weren't specific and exact, a lot of people would answer B. That real estate is traditional because there are some readings outside the CFA curriculum where I've seen real estate being considered a traditional asset class, and that's why I put this question in. From the CFA Institute. So, when you're writing the exam, it's got to be as per their writings, their curriculum. And real estate is one that I can guarantee you I've seen is written as in some readings outside the CFA as a traditional. But for CFA purposes, real estate properties is a transaction in the alternative investment market. And with that, that's the last slide for this LOS. Thank you. Yeah, I just wanted to prove my point on that. So I just Google searched real estate as a traditional asset class, and one of the first things that came up, here's a fairly recent publication, and you can see Frank Fabozzi has written lots of stuff for the CFA in the past on fixed income, and this is Text Financial Advice and Investment Decisions, Jared Wilcox and Frank Fabozzi, 2013, published by Wiley, and it says here the topic of this chapter is traditional asset classes and alternative asset classes. And if you just scroll down a little bit, it says in most developed countries, the 4 traditional asset classes are 1, common stocks, 2, bonds, 3, real estate, and 4, cash equivalents. So I just wanted to really drive home that point that, real estate in some readings is really considered to be a traditional asset class, but as per the CFA curriculum, it's falling under the alternative investments, okay? So that's why you need to be very careful that you just don't, well, I know that, or I know this, or I know that. You have to know things exactly as per the CFA way if you're writing the CFA exam, okay? So that's my last point, and that's my last point for this LOS. Thanks.